It is Sunday, August 23rd, 2026, and this is The High Road. I'm Dan Miller, and I'm just trying to keep the chains moving on these markets today.
This is Elena Rossi. I'm Jules Sterling.
And I'm Buck Reynolds. We have a great show for you today.
Yesterday, we covered 2026 Top 100 Private Carriers Report, ATA leadership transition, and shift to intermodal freight.
And I'm still thinking about Walmart's scale, Dan. But the fuel spikes we're seeing now, they're pushing the actual cost way higher than what those fleets were reporting last quarter.
Right. And it feels like the ATA is in a real leadership vacuum with Chris Spears stepping down so abruptly, especially now when the industry is being sort of squeezed by these legal pressures.
Actually, the intermodal shift we covered yesterday might be the only thing keeping some margins alive. Less highway touch points, less risk. But today, well, you see, the risks are literally hitting the auction block.
The thing is, here's the deal. I was looking at the auction schedules this morning, and the volume of late model equipment hitting the yards is enough to make a fleet manager break out in a cold sweat.
It's a full-on fire sale, Buck. August 2026 is turning out to be a total wallet punch for anyone without deep pockets. Retail diesel just printed at $5.46 a gallon nationally. That's a 45% jump from last year.
$5.46? If you're a small fleet owner, you're basically running a nonprofit at that point, you know?
In California, it's closer to $7. You can't make the math work on a reefer lane when you're paying $7 for fuel and another 20 cents a mile just for insurance. Over 8,000 operators have already tossed in the keys this month.
Well, it's not just tossing keys, Buck. It's Chapter 11. We've got Anchor South out of Alabama, Rambo in California, Stoneman in Michigan. These are established names, just collapsing under the debt.
Look, the play right now for the bib-tier carriers is just sitting back and waiting for the auction houses like Taylor and Martin to clear the field. They're managing an overflow of high-value gear. It's like picking up a Pro Bowl linebacker off the waiver wire because his old team went bankrupt.
It just breaks my heart, Dan. Seeing a rig that's barely 2 years old sitting in a lot because the driver couldn't stay ahead of the fuel surcharge lag. It's a failure of the fundamentals.
But Jules here, I'm seeing some of my larger retail accounts asking if they should be buying this equipment directly, sort of insourcing their own capacity while the prices are down.
If I may, that's a dangerous game. My thing is, you buy that equipment at a bankruptcy auction, and you're often buying a maintenance history that's been neglected for 6 months while the company was dying.
Exactly. If they couldn't pay for diesel, they weren't paying for synthetic oil changes or sensor recalibrations. You're buying a ticking time bomb.
Oh, here's the play, though. For a carrier like Schneider or XPO, these liquidations are a strategic reset. They can refresh their fleet age without paying the OEM premiums. Speaking of things that are going to cost us a premium, the northern border just turned into a high-stakes standoff.
It's officially a trade war, Dan. As of 12:01 a.m. yesterday, the U.S. slapped 50% tariffs on $20 billion worth of Canadian imports. Agriculture, cement, industrial gear, it's all under the hammer.
I suppose I should clarify that this wasn't a random move. The U.S. Trade Representative, Jamieson Greer, basically said the talks collapsed late Friday because Canada wouldn't cave on critical mineral access and missile defense participation.
50%? That's not a negotiation, that's an attack. Prime Minister Carney is already talking about dollar-for-dollar retaliation starting September 8th. I've got drivers who haul steel down from Hamilton. What am I supposed to tell them?
Tell them to brace for impact. The U.S. is using Section 338, which is basically the nuclear option of trade law. Look, this isn't just a spat. It's a fundamental shift in the USMCA landscape.
It's the uncertainty that's killing my shippers, you know? They don't know if they should clear their warehouses now or wait to see if a deal happens before Carney pulls the trigger in September.
Well, actually, the congestion at the border crossings starting tomorrow is going to be the real indicator. Shippers are going to front-load everything to beat that retaliatory deadline. It's going to be a parking lot at the Ambassador Bridge.
I mean, the thing is, we already have a driver shortage in the cross-border lanes. If they have to sit in a 10-mile line for 8 hours, they're going to time out on their HOS before they even reach the customs booth.
Bottom line, it's a zero-sum game right now. The U.S. wants Canada to join the Golden Dome missile defense system. They want Canada to purchase F-35 aircraft. This uses freight to leverage geopolitical defense.
It makes the diplomacy part of my job nearly impossible when the rules of the game change overnight. Before we get into the tech side of how distributors are handling this, we have a quick note from the folks who make this show possible.
You mean the people who ensure our data hasn't been corrupted by a tariff update?
Exactly. Look, strategic logistics requires world-class engineering, and this show is powered by the stack developed by Eric Christensen at Neural Network Media.
He's the architect behind the code that keeps our systems running, and you can support that work by visiting our Patreon at patreon.com/Neural Network Media.
You get a free trial and access to our daily briefing PDF, which, trust me, you're going to need to track these diesel crack spreads next week.
I just like that it actually prints out clear. My highs aren't what they used to be.
So, moving from trade wars to tech wars, have you seen what's happening at Sysco and U.S. Foods lately?
Ha, right. Sysco literally restructured their whole board 3 days ago. They renamed the tech committee the Artificial Intelligence Transformation and Technology Committee.
My thing is, you can call it whatever you want, but you still have to move the freight. Actually, bringing in Jason Murray, the former Amazon VP, that shows they're trying to move toward a platform economics model.
It's all about the last meter, not just the last mile. They're using AI to figure out exactly which entrance of a high-rise building is fastest for the delivery driver.
I mean, I've been saying for years that the hardest part of the job is finding where the customer actually wants the pallet dropped. But do we really need a universal commercial ECM for that?
Well, that's the other side of the coin, Buck. GM just unveiled that UC-ECM today. It's a hardware-software bridge that lets them integrate third-party engines, like a Cummins or an Isuzu, into their chassis with 35% less engineering cost.
If I may, that's a huge liability shift. If the software abstracts the engine parameters, it means the OEM has more control over the performance data. You see, that's a goldmine for cargo claims defense.
Oh, sure. Until the universal translator gets a bug and my engine decides it doesn't speak chassis anymore in the middle of a blizzard.
Well, it's about decoupling the hardware from the software, Buck. If GM can reduce the code validation time, they can get trucks on the road faster.
Look, the reality is that vehicles have 650 million lines of code now. We're reaching a point where no human can audit the whole thing. The UC-ECM is GM's attempt to simplify the nervous system of the truck.
Well, actually, Sysco is doing the same thing with their dispatching. They just launched Pilot with FarEye. It's an agentic AI that handles driver no-shows and accidents without a human dispatcher ever getting involved.
I mean, I worry about the human element there, you know? A driver has an accident, and the first thing they hear is a synthesized voice asking for a damage report? That's cold.
It's more than cold, Jules. It's dangerous. A veteran dispatcher can hear the shake in a driver's voice and know they're in shock. An AI is just looking for a data field to populate.
But look at the margins, Buck. Last mile is 40% of the total supply chain spent. If Sysco can shave 30 seconds off every stop by using geospatial grounding, that's an hour of reclaimed productivity per route.
Precision is the precursor to profitability, I suppose. But if that AI dispatcher misses a safety violation because it was optimizing for time, the Iron Lady is going to have a very long day in court. Speaking of court, did you see the report out of Edinburgh, Texas this morning?
I heard the headlines. It's a bad one.
You see, a joint operation between Border Patrol and the Sheriff's Office found 20 undocumented immigrants inside a tractor trailer at a truck stop. A canine alert started the whole thing.
That is just heartbreaking. And the driver is in federal custody now, right?
Yes, but the real story for our listeners is carrier liability. Look at Executive Order 14411, issued in June. If you lack CTAP validation, the Department of Justice will treat the carrier like a primary suspect in a smuggling scheme.
Look, the bottom line here, and I mean this, is that we are in a verify or die era. The Supreme Court just stripped broker immunity in the Montgomery case. If you tender a load to a carrier and this happens, the broker is just as liable as the guy behind the wheel.
It's desperation, Dan. With rates where they are and diesel at $7 in some places, people start taking risks they wouldn't have considered 5 years ago.
Complacency is the precursor to catastrophe. My thing is, if you aren't using ELD-linked identity verification, you shouldn't be in the brokerage business in 2026.
It's a lot of pressure on the relationship side, too. I'm having to tell long-term partners that if they don't have Tier 2 CTAP status, we literally can't load them.
Right. It's a 2-minute drill, and the refs are checking every single piece of equipment. If you don't have your papers in order, you're sitting on the bench. Now it's time for the week ahead, our Sunday segment where we look at the tactical moves you need to make for the next 5 days.
I'm all ears, Dan. What's the scout report?
Look, Wednesday, August 26th is the big one. We've got the EIA petroleum status report. With the Strait of Hormuz tension still in limbo, the diesel crack spreads are trading over $100 a barrel.
We just saw a 19-cent jump last week. Are we looking at another reset on Wednesday?
Here's the play. Brace for an immediate upward reset of fuel surcharge tables. If you're a broker, you need to separate fuel from line haul in every single negotiation starting tomorrow morning. If you quote an all-in rate now, you're going to get burned when that EIA print drops on Wednesday.
Actually, don't forget the Bureau of Economic Analysis is dropping the PCE price index on Wednesday, too. That's the Fed's favorite inflation gauge.
Right. And if it comes in cool, we might finally see the rate cuts we've been waiting for, That would be a huge relief for fleet renewals.
Exactly. But then we've got Jackson Hole starting on Thursday. All the central bankers are going to be there. If they stay hawkish, this freight recession exit is going to keep being a slow, capacity-led crawl.
It's a lot to keep track of. Tariffs on Monday, diesel on Wednesday, and the Fed on Thursday. It's like trying to drive through a fog bank without a GPS.
Well, I suppose that's why we're here, Buck, to keep the lights on for the industry. My thing is, watch those highway and Samba safety adoption rates this week. The verify or die era is officially in full swing.
I'm just hoping for a little stability. A girl can dream, right?
Look, bottom line for the week ahead, stay liquid and stay loud. If you aren't talking to your shippers about the Canadian retaliations coming on September 8th, you're already behind the play. That's the week ahead for this week. Let's just hope we don't have to see any more 8,000 carrier dropout numbers next time we sit down.
Well, if they follow the safety manual, they might just survive the storm.
That's all for today's High Road. We walked through the liquidations, the trade wars, and the AI pivot. It's a high-stakes game out there, but as long as you're tracking the data, you've got a chance to win.
Bye.
See ya.
Later.
Keep the shiny side up and the rubber side down.